Hey everyone, welcome back to Corporate Decoder, the place where we untangle those twisty corporate filings. Today we're diving into an EOG Resources proxy statement, and let me tell you, there's more than just boardroom chatter hidden in these pages. We're talking executive pay, shareholder votes, and a peek into how this oil and gas giant plans to keep things humming, and yes, even green. So buckle up, because we're about to decode some corporate strategy. First off, this is a Schedule 14A, which means it's a proxy statement. Companies send these out to shareholders before their annual meetings. It tells you who's running for the board, what big decisions are up for a vote, and generally what's been going on behind the scenes. EOG's annual meeting is set for May 21, 2025. At the meeting, shareholders get to vote on a few key things. They'll be electing 8 directors to the board, basically choosing the people who will be guiding the company's strategy. There's also a vote to ratify, meaning to approve, the appointment of Deloitte and Touche as their independent auditors. These are the folks who check the company's financial statements to make sure everything looks good. Then there's a say on pay vote, which is a non-binding advisory vote on executive compensation. It's a chance for shareholders to voice their opinion on whether the top executives are being paid fairly. To find our way around, let's use the table of contents. It gives us a nice overview of everything that's included, from stock ownership to director compensation, and even some shareholder proposals. Let's take a look at who owns the most of EOG. The Vanguard Group comes in at the top with about 9.71% of the company's stock. Capital World Investors and BlackRock Inc. also hold significant chunks, 7.35% respectively. This is important because these big shareholders have a lot of sway in company decisions. It also lists how much stock the board members and top executives own. For example, Michael P. Donaldson, an executive vice president, has beneficial ownership of 86,320 shares. Overall, the directors and executive officers as a group own a small piece of the pie, around 0.1% of the company's stock. This is important because executives with big ownership have incentive to make good company decisions and increase the share price. Let's move to the board of directors. The filing notes that Donald Textor is retiring from the board. The board has 3 key committees: the Nominating, Governance and Sustainability Committee, the Audit Committee, and the Compensation and Human Resources Committee. Each committee has specific responsibilities. The Audit Committee deals with financial reporting and auditors. The Compensation Committee looks after executive pay, and the Nominating Committee handles board nominations and environmental matters. Alright, let's dive into the compensation discussion and analysis, or CDNA. This section explains how EOG decides how much to pay their top executives. These executives are crucial, so attracting and keeping them is essential. Back to CDNA also talks about executive transitions. Andy Jansen was appointed Chief Financial Officer in January 2024, and Lloyd W. Helms Jr., the former president, retired in May. This shows leadership changes and how the company is evolving. EOG emphasizes a few key features in its compensation program. They link pay to performance, so executives are rewarded for achieving company goals. A significant portion of executive pay comes in the form of long-term incentives, mostly tied to stock price performance. The goal is to align executive interests with those of shareholders. EOG's compensation program has a few main goals. The first is to be competitive in the market, ensuring they can attract and retain good people. Another is to link pay to company performance, so executives are rewarded when the company does well. Finally, aligning with shareholder interest is key, which means the executive's success is tied to the success of the company's stock. The base salaries for the top executives are listed in the filing. We see that in 24, CEO Ezra Yacob's base salary was $1,350,000. CFO Ann Jansen's was $645,000, and Executive Vice President Jeffrey Lightsel's was $660,000. These figures show what the company values the different roles to be. EOG's executive officers are also eligible for annual bonuses. These bonuses depend on how well the company meets financial, strategic, operational and organizational goals. The annual bonus is based on quantitative and qualitative, referring to data and numbers accounted for 80% of the decision. This is good for accountability. Speaking of performance-based compensation, there's also a breakdown of how performance units are paid out. For example, performance units granted in September 2021 was certified at a performance multiple of 121.1, was certified at a performance multiple of 25%. This shows how stock performance can directly translate into executive compensation. Here are the numbers you've been waiting for. For the year 2024, Ezra Yacob's total compensation was $16 T5 and Jansen's was $5,925,698,698 $698 and $698, and Jeffrey Lietzel was $5,009 and Hireth and $594. Seeing those numbers gives us a clear picture of the total pay packages for the top executives. It's worth pointing out the salary for president was $1,153,110, however Helms retired. It is also useful to compare CEO pay versus non-CEO. The table sets out the grants of stock awards, how they work, and what the executives can receive at thresholds and targets. We learn more about performance and targets in the table and the opportunity they may vest. At the end of 2024, the executives are holding a lot of stock, meaning their incentives align with company performance. It would be very useful to see the previous year's stock holdings and trends, which is something we might look into in a future episode. Now let's see how much the directors get paid. Looking at the director compensation table for 2024, we see that most directors earned around $400,000 with a mix of cash fees and stock awards. As for the year before, we can find this in previous filings to get a better sense of trends if we are interested. This aligns with industry standards for board compensation. There's a vote to ratify the company's auditors, Deloitte and Touche LT. The document outlines the fees EOG paid to Deloitte for audit services, audit-related services, and other fees. The overall amount for audit fees for 2024 was $4,119,500. It's common practice to have shareholders vote on this, and it's unlikely to be rejected. Now, let's move on to the board's strategic decision making. It's worth noting that the board doesn't have a formal policy on separating the roles of chairman and CEO. They believe it's best to decide based on the company's needs at the time. Currently, Ezra Yacob holds both positions. The board's role in risk oversight is discussed, including how the audit committee assists with enterprise risk management. The committees also consider specific areas of risk inherent in their areas of oversight. This demonstrates that the board is aware and involved in managing risks. EOG has a strict policy against hedging and insider trading. Directors and Section 16 officers are prohibited from hedging or short selling EOG stock. There are also rules against pledging stock as collateral for a loan. This reinforces ethical behavior and protects shareholders. EOG has a clawback policy which allows the company to recover incentive-based compensation. If there's a financial restatement due to misconduct, this is a common practice and it serves as a deterrent against bad behavior. Finally, a quick note on how to access the proxy materials. EOG is making these documents available online, which is increasingly common. It saves money and resources, and shareholders can easily access the information. So after going through the filing, what's our take? EOG seems to be running a pretty tight ship. They have major stockholders and strict policies around their actions. The compensation programs are structured to encourage good performance, and the company emphasizes sustainable practices, and on the side there were some interesting executive transitions. There are also a few things that are worth keeping an eye on, a few trends to watch. How will company transition after retirement of key people? How will they continue their environmental commitment? And finally, will they maintain their strong financial performance and more specifically RCE? Ultimately, the company seems to be performing well, but as always, it's important to keep an eye on any major developments. Kant, thanks for watching. If you found this helpful, please like, comment and subscribe for more corporate deep dives.